Welcome back, everyone. Today we'll be looking into Walgreens Boots Alliance, traded on the Nasdaq with a ticker symbol of WBA. A really interesting dividend stock that for my future US portfolio I'm definitely eyeing up as a good percentage of it. Now, let's just jump straight in. We'll see over the last 5 years how they've been doing. Not great. They're down 46%, currently trading at $38.63. In the last year, the story is still not that great, down 23%. The lowest they've traded at is $30.52 back in October there. And they've rose somewhat, about $8 since then. Now, their dividend yield sits at 4.97%, which is really admirable considering they've been paying that dividend for years, at least a decade, if not more. Definitely a fantastic dividend payer in that regard. They've also been growing their dividend per share year on year for again at least the last decade. So that's a fantastic thing to see. This also gives you exposure both the UK market as well as the US one. Of course, them owning Walgreens in the US as well as Boots in the UK and the Republic of Ireland. A few other businesses internationally, Mexico and whatnot. But yes, let's dive right into their dividend. First and foremost, rounds up to about 5%. I did calculate that if you wanted £1,000 per month off them, you would probably need in around 10,000 shares. My logic on this is that considering they pay about $4,800 per quarter, it does grow per quarter quite nicely, as you can see, and has been doing so for years and years and years. Since at least 2010, they've been growing their dividend per quarter. Fantastic to see. Yeah, after having 10,000 shares, which would be approximately about $330,000 US, you'd be earning about 1,000 sterling once you take in like dividend tax, or US dividend tax. Actual dividend tax in the UK, I don't exactly know how that would work, but obviously this is just theoretical. And yeah, it's an interesting way to look at it. But they do pay quarterly. Their next ex-dividend date is the 16th of February, and their declaration date is the 26th of January. For anyone new, the ex-dividend date means you must own the share the day before, so you'd need to own it on the 15th in order to get the dividend payment on the 13th of March. With all that, we're going to jump over to one of my favourite websites. Of course, you know it, you love it. Simply Wall Street. Let's look at their snowflake analysis and see what it says about Walgreens Boots Alliance. 6 out of 6 on dividend. That's a really rare metric to see at all. You know, it's good, it's reliable, sustainable and growing and well covered. Nice. Valuation, they score 5 out of 6. Of course, they are down their luck recently. So that's definitely punched in there. 0 out of 6 for future growth. Okay, not great, but not to fear. 3 out of 6 for past performance and 4 out of 6 for financial health. 6-star dividend pair that's very undervalued. Let's have we look here now. 33 billion market cap. Trading at 71% below their fair value. We're going to have a look at that. It's based on discounted cash flow model. We'll be looking at intrinsic value and alpha spread later. Earnings grew by 117% over the last year. I think that's because coming out of the pandemic, a lot of their stores were, I believe, quite a few were probably closed, although they were an essential business. I'm not sure how it worked from state to state over COVID, but I can definitely see it impacted their financials. Pays a high and reliable dividend of 4.97%. and trading at a good value compared to peers. Now, what's the catch? Large one-off items impact financial results. Earnings are forecast to decline over the next 3 years. Right, dead on. We're going to have a wee look into that. Now, I will be comparing them against the likes of CVS Health in a later video, so do stay tuned for that one. All right. Let's see. 226,000 employees, founded in 1901. CEO is currently Roz Brewer, Miss Roz Brewer. We'll be having a look at her later. She's relatively new to the job. I think she's only been in about almost under 2 years. So that's something to bear in mind, definitely. PE is 7.7. And as we can see, revenue was $132 billion. $104 billion cost of revenue, leaving them a gross profit margin of $28 billion, which is 21% margin. After all other expenses, they were still left with $4.3 billion in earnings, 3% net profit. But here, That's still very impressive. The next earnings date is January the 5th, so certainly put that in your calendar if this is a company you are indeed looking at. The last report was August 31st. Wow, it's almost into 2023. This year is flying past. Current dividend yield is 5%. Payout ratio, 38. That's pretty modest. Nothing mad to see there. Now, we can go to the valuation. They score well on every metric except analyst forecast, which you all know I love analyst forecast because I look at them and go, I'm amazed they can predict some of this stuff, and I don't take it to heart. Let's go down here and see 71% undervalued. So fair value based on a discounted cash flow model is $134. Very impressive. I don't think they've got even remotely close to that, but it's definitely a metric to bear in mind. Analysts' target price is less than 20% higher than current price. But again, it is analysts, and future growth as well is also analysts. We can see sort of 2020 is where their earnings actually went into the red. Coming out of 2021, they came roaring back though, and the earnings as of August there was $4 billion in earnings. Free cash flow, again, they are a they're a cash generating machine, so they have about $2 billion in free cash flow. Forecast earnings are to decline in the coming years, but rebound towards 2025. So again, it's just something to keep an eye out on and see how it goes. Past performance sits at negative 6.8% historically. Again, that mainly kicks in at COVID. Once the pandemic kicks in, their profits obviously take a big hit, but they've come back since. So not the big. How has operating expenses been? More or less the same every year. Nothing too different there. No problem. Down to financial health, something I really wanted to look into for them. $16.9 billion in the short term against $22 billion, right? But they're well covered in the long run. $73 billion to $37, so clearing almost $35 billion in the long term. Debt equity ratio, again, pretty decent. $30 billion in equity to $11 billion in debt, 38%. We'll see how much they got in cash and equivalents, about $2 billion. Okay. Now, the good news is they have been reducing their debt ratio over the last 5 years. Their debt's also well covered by operating cash flow, and interest payments are well covered as well by a 7.7 time coverage. Dividend, perfect. 6 out of 6. It's notable, high, stable, growing, earning coverage and cash flow coverage at 4.97%. When I first started my dividend journey, Walgreens Boots Alliance were one of the first companies that I really delved into because of their dividend. And you can see from the chart here that they have been growing their dividend per share consistently for the last decade, which again is fantastic to see. You can see it kind of had a bit of a slow up in the last 3 years. Obviously, the pandemic has certainly something to do with that. But their yield has been the highest it's ever been at 5.6%. Once I do start my US portfolio, I'm looking at including some Walgreens Boots Alliance, WBA. Should just shorten it most of this video, but that is what it is. We can see here earnings payout and cash payout is both pretty much in the green and looking not too bad at all. Yes, so Roz Brewer, tenure at the moment is 1.75 years, so just under 2 years. Was she was the director at Village Practice Management Company since 2022, March 2022, and she's been the chief executive officer, CEO and director at Walgreens Boots Alliance. She served as the COO and group president of the Starbucks Corporation from 2017 to 2021. There you go, and also served on executive vice president Walmart stores from 2012 to 2017. That is certainly a rap sheet worthy to look at. Be sure to have a deeper dive into the CEO if you want to learn a wee bit more. She was with Kimberly-Clark as well back in 2004. Wow. Definitely been around. That is encouraging to see, to say the least. And obviously being brought in just sort of middle of the pandemic, not a great time for anyone. So we'll definitely have a look and see how will our WBA perform in the coming years. Down to ownership, one person sold 16,000 shares. Nothing too notable there. Got out of $39. It's not the worst. Not the worst time, I suppose. Now we can see their ownership is divided into 3 columns: institutions, general public, and private companies. Top one being Newsip, one that I've actually never seen before. I wonder what this company is. Vanguard, BlackRock, and State Street are kind of what I expect at the top on these US companies, so definitely no surprises there. They employ how many at the moment? 262,000 employees. Ooh, quarter of a billion employees. Not bad. Quarter of a million. A billion? Damn. 862 million is the outstanding shares. Not too bad. Right. On to their website, because they have something really interesting that I wanted to show you. Now, of course, you know that they have their... does this divide it nicely for me? Yes. So they've got their US retail segment. Obviously, Walgreens, a lot of you in the US will be very familiar. If you've holidayed over there, you've maybe seen or encountered a Walgreens. In terms of their international segment, that actually includes Boots, which is something that I am personally a lot more familiar with over here and often use it. So, and then they've got the US healthcare segment. Now, this is where it goes into just their majority-owned businesses such as Village MD, Shields, and CareCentrix. They carry out a lot of locally delivered healthcare. Number 7 Beauty Company, again, another product that a lot of you are probably very familiar with. Maybe buying the missus or a family member. In 20,000 retail outlets in 16 markets worldwide. But they also have one other thing that I want to show you, is their investment portfolio. And this is a very interesting aspect of WBA. See, they have a global portfolio of healthcare-focused investments. Mainly, I'm going to butcher this, I think it's AmerisourceBergen, which is a company we will be looking into. And they are both a healthcare provider and pharmaceutical and biotech manufacturer. Walgreens Boots Alliance own approximately 17%, giving you a bit of access to a company that you could go buy shares of independently, but through WBA you do get a bit of coverage over it, which is good to see. Boots Hearing Care is another business that they have, mainly in the UK, of course, more Boots stores. CareCentrix, an industry leader in post-acute and the home care sector, providing care coordination, outsourced benefit management. Nice. It currently manages care for 19 million members in more than 7,400 provider locations. Option Care Health, Shields Health Solution, what do? They are a specialty pharmacy integrator and accelerator for hospital leaders who want to provide a specialty pharmacy program that is fully integrated, comprehensive, and on-site care. Woo, that was a sentence and I had to get through. And then they have Village MD. Through Medical Village, it is a leading US provider of primary care services. So, provide the tools, technology, operations, staffing support, and industry relations to deliver high-quality clinical care and better patient outcome. Investments in China. Sinopharm Medicine Holdings, a retail pharmacy chain in China with 8,500 pharmacies. Nice. And then the Nanjing Pharmaceutical Company, one of the largest wholesalers in China. So there you go. You not only get exposure to the Chinese market, in the Asian market through China, you also get, obviously, a lot of companies in various sectors of the healthcare services. And then you get a completely, exposure to AmerisourceBergen as well. So definitely something to bear in mind. Now let's jump over to Alpha Spread. They'll have a wee look at intrinsic value. Again, it's combining discounted cash flow model and relative value. Be sure to check out the link if you want to learn more on this website. It's quite interesting. You get three companies per week for free to look at. So that's currently what I am using. Let's see here. So $63 is their intrinsic value. Worst case, $49, and best case, $105, meaning they're approximately 40% undervalued. Now, obviously, a discounted cash flow model gives it 70% undervalued intrinsic value. Obviously, I I like to look at this and the DCF model. You know, you can even look at the relative one on its own, and you can come to your own conclusion on that. I like to provide as much resources as I can if you're having to look into anything. And that's pretty much Walgreens Boots Alliance covered. Let me know what you think in the comments. I'll catch you on the next one. Thank you.